Well, good morning, everyone. Thomas Montgomery. It's a beautiful Tuesday morning, October 11th, 2022. We get together with our distribution partners most weekday mornings at this time. We will not be getting together Friday. Remember, those of you that are regional vice presidents that met your quota for last month in September, we're flying you all in first class. We're going to be staying down on the Riverwalk in San Antonio. So if you have not received your airfare or hotel confirmations, please let us know ASAP. But today we're going to talk about the new funding source selection sheet, which should be a shared page. I'll make it larger and we'll go through the highlights. But before we dig too deep into that, I think it's important to understand how this could be used. So let's take someone like Collis, who's on the line, and Collis is off to a really good month this month as a white label partner. But let's say that Collis has a client or prospective client that just won't sign up for one reason or the other. Collis could take this funding source selection sheet and get it in front of the client, whether it be literally or send it via Adobe or DocuSign, and say, hey, Bob or Susie, why don't you check off the types of funding that you'd be interested in receiving? So it's kind of a menu-based selling model whereby you're able to show people different options, show prospects different options for funding sources. And people like that. I'm a little older than many of you, but back when I was a kid, we used to get Christmas catalogs that would be mailed to us from Sears and Montgomery Ward and others. And man, as a young child, there was nothing more exciting than getting that Christmas catalog and going through and circling the items that you hope that mom or dad or Santa Claus would bring to you. There's just something about shopping and selection that just most people tend to like. And so using this funding source selection sheet is a way that you can create that positive emotion and excitement by prospects to help them move forward in the process. Because of course, for us to go help them get the funding, they're going to need to enroll in the Access to Capital program. No strings attached. There's no upfront cost that they have to pay. There's no risk. They have a guaranteed $100,000. But the point is using this to both help them understand that there's many types of capital, but also using this as a method to generate excitement and interest. So let me make this larger. And what we do want to understand is that while this is an accurate reference sheet, it is not all inclusive. It does not describe every specific detail of every funding source. And that's somewhat by design. Number one, it'd be a lot longer than one page if it did have all those details. But also, for those of you working out in the field, generating the prospects as white label partners and generating clients, I think you want to generate enough interest and enthusiasm that they take the next step, but not become burdened with being able to explain every element of the underwriting of every funding source. So it's okay that this doesn't give A to Z on every type of funding model, but let's go ahead and go through the highlights. So these are listed in no particular order, and we have about 12 or so, 10 or 12 funding categories, if you will. Are there more categories than this? Yes, but these are the most popular. So we have credit line hybrid. First thing that we want the prospect to know is the dollar range. So this is not going to generate $1 million of funding. It won't. It's normally from a low end of 10 to a high end of about 150,000. We've seen it go above 150,000 a time or two, but that's the normal range. And then a lot of times they'll want to know, well, what's the interest rate? How much is this going to cost me? And the nice thing about credit line hybrid is it's typically a 0% interest rate initially. They'll want to know, well, what are the credit requirements? And for credit line hybrid, it has a higher threshold of credit requirements than many of the others. And it does require a 680 plus. And then lastly, many of them will want to know, well, how long do I have to be in business to qualify for this? And there is no minimum time in business. So the credit line hybrid is a nice one. It's very fast. Business revenue lending is another category. Here we can go up to millions, multiple millions of dollars. The interest rates are set up differently. It's a factoring rate. Credit requirements very low, and there is a minimum time in business of 6 months. Term loans, and these can vary just so considerably. It's challenging for a few of these categories to give the bullets because it can vary so much, but term loans are certainly, and we could almost say non-SBA term loans because we're talking about SBA separately in a minute. But here we can get up to 5 million on a term loan. The interest rates will vary. We can't really give a good reference on it. In general, we need about a 660 credit score to qualify for it, and the time in business will vary. So I realize this one is not quite as helpful in giving the prospect details because there's just too many options to summarize it well. Lines of credit, we hear a lot of small businesses looking for lines of credit so they can just pull from it when they need instead of getting it all at once. Those typically will go up to $250,000. Simple interest, but the interest rates will vary. We need about a 600 credit score on that, and we do need 6 months in business for the typical line of credit. Accounts receivable financing, this is what Alfred is a specialist in. We can go up to 20 million on AR financing. Interest rates are very low. Bad credit is fine, and there's no minimum time in business. Business credit and funding. So in other words, now we're focused under the EIN itself. And so those amounts can go up to 5 million. There's a variety of different tools, or I shouldn't say tools, of funding resources is what I should have said. So the interest rate will vary based upon those different funding instruments. There's no use of personal credit. So a lot of people like that. And there is no minimum time in business. Back up to the top, equipment financing is good. It works for many of our clients that are looking to buy, not real estate. They don't need just general working capital, but they want to buy vehicles or they want to buy specific tangible equipment. In those cases, we can go up to 10 million typically for equipment financing. Interest rates very reasonable. Credit requirements are quite reasonable. And in general, there's no minimum time in business. Now, there is a specific startup equipment financing subset as well. So yes, equipment financing can be accomplished by brand new businesses. Retirement account financing, and this is interesting one that's often overlooked. We were working on a client file this morning that he had just submitted in his personal financial statement. He's showing $400,000 in his retirement account, so we can use that as collateral. But regardless, those amounts can go up to 10 million, interest rates very low. There are no credit requirements, no minimum time in business. The SBA, again, is another one that's difficult to reduce down to just a simple set of bullets because there's different types of SBA loans. There's SBA micro loans, 7A, 7A Express, 504. Again, we're not trying to burden you with becoming an expert on every type of funding instrument. But what we did want to give you each is a reference sheet that could be used as a talking point to help move your prospects forward. So in general, on the SBA will guarantee loans up to around 5 million. Is it possible to get an SBA guaranteed loan above 5 million? Theoretically, yes, but the SBA is only going to guarantee a portion of it. The bank would be without a guarantee on the rest. But let's go with that as the normal cap of 5 million. The interest rates for SBA loans are typically queued off of prime. So it's prime plus a certain amount, but very reasonable. Credit requirements sometimes throw people off because the SBA Well, again, there's different SBA funding programs, but typically they're looking at a different credit scoring algorithm than what a lot of us are used to. It's called FICO SBSS, Small Business Scoring System, and we need a 165 for it. The good news is if a client doesn't have a 165, we can get them to a 165 normally very quickly. And there is no minimum time. And you'll have people that battle with you that think they're right, but they're really illiterate because they don't know what they don't know. But the SBA does not require a minimum time in business. Now, there might be some SBA lenders that require some time in business to apply or to be approved, but that should not be wrongly extrapolated to think that's an SBA requirement, because there are some lenders that don't require that. Real estate financing is big. And again, this is not a full description. It could be for residential properties or commercial properties to buy and hold, fix and flip. I know there's all those variables. Our goal isn't giving a description of each, as you noticed. It's just to give enough information that hopefully your prospect can identify the sources that they would like. And you might even print this out and give them a pen or a pencil and have them circle the types that they would like to be considered for. But regardless, on real estate, I guess theoretically there is no cap amount, but it's tougher once we get above $20 million for real estate financing. Very reasonable interest rates, very reasonable credit requirements, and there are no minimum time in business. The Chapman Fund, which we've talked about recently, is not a bank loan. It's from a taxing district. It has a hard cap, and people sometimes get very frustrated or angry with us. We've had people curse at us because the Chapman Fund wouldn't approve them for more than $250,000. But what you have to keep in mind is we can stack or combine different sources of capital. So true, maybe we can only get $250,000 for the Chapman Fund. That's their policy. But that doesn't mean that we couldn't then go after an SBA loan or a line of credit or something to combine with it. Again, interest rates are low, similar to the SBA approach. It's based upon the current prime rate, which is, of course, always changing, seems now. Very flexible credit requirements, no minimum time in business. And then lastly, and this is a very, very important one, because equity financing could be used in addition to debt-based financing, or it could be used in lieu of and instead of. And I think a lot of people overlook equity-based financing. So these amounts really can be across the board, but in general, once we get above about 25 million, it's a much more difficult capital raise. There are no repayment terms, so there are no interest rates. We don't have to pay this money back, which is great. Thus, there's no credit requirements and no minimum time in business. Now, on this sheet, the way that we formatted it here, we have it where we've uploaded it into Adobe as a template, and we can send it out to prospects. And what we've done is we've put little check marks by each one of these so they can check the ones that they're interested in, and then they sign it, and then we sign it. It's not a contract. It doesn't commit them to anything, didn't commit us to anything, but it's a great way to help clients take that step forward and start to better understand in a more tangible way different types of financing that's available that we can assist them with. So with that being said, I did send this out formatted slightly different to each of you yesterday afternoon in preparation of today's call, Zoom. Who has questions, comments, concerns on this? Timothy brings up a great point. So as I think each of you know, you're not the lender. We're not the lender, right? We're the technical advisors. We do three things. We help build financial literacy, we help build lender compliant loan packages, and we help clients become compliant so they meet the credibility standards to be approved. So we don't want, Timothy, we don't want to fall into the trap of you feeling like that you have a complete underwriting grid for each of these, because A, it's not really necessary. B, if you misspeak to that, then none of us want liability. And C, it's the lender that ultimately makes the decision. So if you were to use this as we've talked about, as a way to help move your leads into become your prospects to become a client, this is helpful, but it doesn't replace the process. And the process is we're going to build their loan package out. We're going to gather information, detailed information about their mitigating circumstances, so we can determine which of these that they would qualify for. Now, it is helpful to have on their file those things that they're most interested in. And of course, we want to go after the types of capital that they're interested in. But Timothy, don't interpret that, just because they come down here and check a line of credit, if there's a little check mark here and they check the box that, automatically they sign up and tomorrow they get $250,000. It's not, of course, not that. Who else has questions, comments, concerns on this new resource sheet, which has been sent to each of you? So at one level, hopefully it's helpful just to get you more aware of the vast types of funding that you and I can help small businesses access. So there's one purpose of the document. Another purpose of the document is, in fact, to use with your prospects to give them a more tangible understanding of how you and I can help them through most likely the Access to Capital program that prompts them to want to move forward. Because if they're wanting a credit line hybrid, or they're wanting an SBA loan, or they're wanting a line of credit, great. What do they need to do next? They need to sign up with you, right? With the Access to Capital. What's that cost them? Nothing up front, no risk, guaranteed capital raise. So again, this is meant to be both a resource sheet and also a tool to help you move your prospects forward in the sales process to get them under contract. Any questions, comments, concerns? Barry's asking if I can send this revised format out. And yes, Barry, I'll send it out with the recording from today. Absolutely. And so if you wanted to either set this up on your landing page, Scott Stroud, our Chief Marketing Officer, can help you get this set up on your landing page if you want that. If you want to set it up as an Adobe or DocuSign template, you can, or if you don't want to use it at all. But I think people respond to seeing a physical illustration of what they're trying to accomplish. And it's kind of exciting for them to sit down and check the boxes that they're interested in. Will they have questions? Maybe, but what you want to do is defer those. Say, no worries. We need to get you plugged into the program. We'll assign an advisor who will work with you to be able to answer your detailed questions about it. So don't see this as a burden of, oh no, now I have to be an expert in each of these. Not at all. Introduce it, get them signed up, and then we'll work with them. All right, well, we're going to cut training short today because of a time conflict. Thank you all for your time, and we will see you back tomorrow morning, same time, same place. Bye-bye.